Get ready for the future because the Solana Foundation and Google Cloud have just launched Pay.sh, a revolutionary new payment gateway designed to unlock the power of AI agents. This groundbreaking service lets AI agents access and pay for powerful Google Cloud APIs, including Gemini and BigQuery, directly using stablecoins on the Solana network. We're talking about eliminating all that manual hassle. No more account creation, no more credential management, just seamless per-request payments powered by the Open Payment Protocol X402. This changes everything about how autonomous workflows will operate.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we dive into the massive shifts happening at Accenture as they aggressively pivot their strategy with key partnerships. Accenture is trading at $180.12, and their focus is laser-sharp on applied AI, signaled by their strategic investment in Netomi and expanded Google Cloud AI work. This move is positioning Accenture to be the go-to partner for large-scale, AI-heavy transformation projects, especially in customer-facing processes, putting them squarely in the race against giants like Cognizant and IBM Consulting. In huge news for the tech titans, Alphabet is closing in on Nvidia's spot as the world's most valuable company. Riding a massive stock rally fueled by its AI efforts, Alphabet is poised to potentially reclaim the top spot for the first time in over a decade. With explosive growth in its Google Cloud segment, and custom chips competing directly with Nvidia, investors are watching closely to see if Alphabet's massive AI spending is finally paying off against the broader AI food chain. And finally, the AI landscape is getting a major shakeup as Microsoft and OpenAI renegotiate their epic partnership. They've loosened exclusivity, allowing OpenAI to sell products across Amazon and Google Cloud, which fundamentally reshapes cloud model economics for everyone. This deal means Microsoft is securing a guaranteed revenue cut and broadening cloud access for frontier models, signaling a major structural shift in how enterprises access and deploy cutting-edge AI. Stay tuned right here for all the latest breaking news and analysis. The Solana Foundation and Google Cloud have officially launched Pay.sh, a revolutionary payment gateway designed to enable AI agents to seamlessly access and pay for Google Cloud APIs using stablecoins on the Solana blockchain. This new platform aims to dismantle the complex manual processes that traditionally bottleneck the software economy, such as account creation, credential management, know your customer, KYC procedures, billing arrangements, and subscriptions. Pay.sh empowers AI agents to discover various APIs, view real-time pricing, and execute payments directly from their Solana wallets. The gateway provides agents with unified access to a suite of critical Google Cloud services, including Gemini for AI inference, BigQuery and Bigtable for data warehousing, Cloud Run for infrastructure, and Vertex AI for advanced machine learning capabilities. Furthermore, the marketplace features over 50 community API facilitators spanning e-commerce, market data, communications, and blockchain infrastructure. Technologically, Pay.sh functions as an API proxy hosted on Google Cloud, sitting in front of services like BigQuery and Gemini. Crucially, it replaces traditional credential reliance. An agent Solana wallet serves as its identity. Payment is authorized via X402, which verifies the request against established rate limits, quotas, and access controls. All settlements occur in stablecoins on Solana, with providers receiving funds post-reconciliation. The Solana Foundation emphasized that the gateway is built on open standards, including X402 and MPP, specifically engineered for machine-native payments and agent-to-API commerce. This launch signifies a major step forward in establishing robust payment infrastructure for the burgeoning ecosystem of autonomous AI agents, aligning with the broader shift toward automated workflows. Accenture is strategically repositioning its business through key partnerships with Netomi and Google Cloud to reshape its customer experience offerings, signaling a deep integration of applied artificial intelligence across its consulting and outsourcing services. The move is viewed by investors as a direct effort to align Accenture's footprint more closely with AI-driven solutions, particularly for customer-facing processes. The investment in Netomi, which features a no-code orchestration layer and an agentic AI platform designed to integrate seamlessly with existing contact center tools, targets the immediate customer service layer. In contrast, the expanded collaboration with Google Cloud focuses on developing large-scale AI agents and decision systems capable of operating across entire enterprise value chains. These dual strategies provide Accenture with enhanced control over both the foundational components of AI-powered customer interactions and the comprehensive programs that weave these interactions into broader operational frameworks. This positioning is crucial as enterprises decide how to deploy AI agents, potentially influencing how clients perceive Accenture as a partner for massive, AI-intensive transformations in competition with firms like Cognizant, Capgemini, and IBM Consulting. For investors, the key indicators for assessing this strategy will be the speed at which these partnerships translate into tangible client wins, reference projects, and measurable usage metrics for Netomi-powered or Gemini-based agents. Furthermore, tracking case studies that quantify improvements in metrics such as time to resolution, customer satisfaction, and cost to serve will be vital. Over time, the mix of AI-heavy work versus traditional projects in contract structures will clarify the centrality of these alliances to Accenture's growth and margin profile. Alphabet is rapidly closing in on Nvidia to become the world's most valuable company, driven by a record stock rally fueled by aggressive artificial intelligence initiatives and a booming cloud business. This potential shift would place the Google parent at the #1 spot for the first time in over a decade, following a brief tenure by Apple in 2016. The trajectory reflects a significant change in market sentiment, positioning Alphabet as both a major AI services provider through its cloud platform and a formidable competitor to Nvidia in the chip market via custom processors that have secured clients like Anthropic. Wall Street has been impressed by Alphabet's cloud growth, which has significantly outpaced expectations from rivals Amazon and Microsoft, bolstering investor confidence that substantial AI investments are yielding returns. Analysts point to hyperscaler capital expenditure and early monetization signs from Alphabet as key drivers. Nvidia's market capitalization was recently near $4.79 trillion, trailing Alphabet's $4.67 trillion as of Tuesday morning. Alphabet's performance has been stellar. Its Google Cloud segment reported a 63% revenue growth in the first quarter, surpassing analyst forecasts and marking the highest growth rate since the segment began generating revenue in 2020. This surge indicates strong demand for cloud and AI offerings. CEO Sundar Pichai has confirmed that Google has begun directly selling its AI chips, which compete with Nvidia's semiconductors, to certain customers. Alphabet stock has surged approximately 24% this year, contrasting with Nvidia's modest gain of about 7%. While Nvidia's stock saw a dip following news regarding OpenAI's performance, Alphabet continues to attract significant investor attention. Valued at about $4.5 trillion at its last close, Alphabet's valuation dwarfs the combined market value of Germany and Switzerland's main stock markets. Furthermore, Alphabet's shares have surged 65.3% in 2025, underscoring the market's perception of Google as the leader in the AI race. Microsoft and OpenAI have renegotiated their partnership, significantly loosening exclusivity terms to expand AI monetization options for OpenAI. Reuters reports that the revised agreement allows OpenAI to sell its products on Amazon and Google Cloud, moving away from previous cloud exclusivity arrangements. Following the renegotiation, OpenAI reorganized as an OpenAI Group public benefit corporation, and Microsoft now holds an investment in the newly structured entity valued at approximately $135 billion, representing about 27% on an as-converted diluted basis. Regarding intellectual property and access, OpenAI's blog confirmed that Microsoft retains key intellectual property rights and Azure API exclusivity until Artificial General Intelligence, AGI. However, the scope of research IP protections is being refined, with limits set on certain IP areas, while broader IP rights extend through 2032. Furthermore, Reuters indicates that Microsoft will receive a guaranteed 20% cut of OpenAI's revenue until 2030, subject to an undisclosed cap. This structural shift fundamentally alters the cloud access landscape for frontier models and changes the commercialization pathways for enterprise AI. The move facilitates multi-cloud access to these powerful models, which can increase enterprise portability, but also introduce greater operational complexity for providers needing to certify performance across diverse environments. From a business perspective, the changes are expected to free up Microsoft capital for further Copilot investments and broaden cloud capacity options for OpenAI. This development follows strong internal metrics for Microsoft, including a 40% year-over-year increase in Azure revenue and a 250% year-over-year rise in Copilot paid seats. Industry observers view this ending of strict exclusivity as a major structural change in enterprise AI supply chains, potentially reducing vendor lock-in for customers. While loosening exclusivity may lessen some antitrust scrutiny in regions like the US, UK, and Europe, regulatory attention on these large cloud model relationships remains high. For practitioners, this signals a need to adapt deployment strategies. Companies relying on frontier model hosting should anticipate increased multi-cloud integration work and the adoption of new procurement models. When exclusivity ends, industry patterns suggest customers will demand clearer service-level agreements, SLAs, cross-cloud inference benchmarks, and standardized security attestations. For data science teams, this will necessitate reevaluating vendor criteria and deployment testing requirements, though the fundamental need for reproducible model pipelines remains unchanged.